we go. Okay. All right. Okay, so it is 7:30. We are going to go into 8:30. So I'm going to make sure we stop in an hour, however long that may be. All right. So we will get through as much as we can of resident training. So welcome to week number 2. Here we are, the theoretical plan, income, adjustments, deductions, which is like a very large topic. So that's why I was hoping to be done before 7. We'll see what we can do. All right. So we'll talk just a tiny quick a bit about Moodle and go on to these things. So as a reminder, so I am adding people to the resident course based on what you put in the volunteer data quiz, right? So there's a question there that says, what kind of volunteer do you want to do? Do you want to do non-resident only? Do you want to do advanced and have non-resident and advanced taxes? So based on that, I'm adding people to the class. If you want to do resident taxes and you answered it wrong or I haven't got you in there yet, just send me an email. I will be happy to add you, right? There's no magic or rocket science about adding people. I'm happy to put you in there. It's no problem. On the quizzes themselves, there was one question. Thank you, Shahid, for that. Who has to file a tax return? I had an incorrect answer, so that has been updated and regraded. So for whatever it's worth, if you've already done that, then that will now show as correct. There are 3 quizzes on this one. So who has to file a tax return? Because the IRS really cares about that. Then dependents, like who is eligible to be a dependent or not, and filing status. The course was published later than I wanted, so don't worry if things are not done for tonight or the next few days, right? Just get to it as you can. Everything does still follow that same sequential. You know, you need to do this first and then that first because it really does all build on it, right? You can't say that somebody has a filing status of head of household until you understand, hey, do they have somebody that they can claim as a dependent? And again, I'm going to get this out here. So for everybody here, so we have the 4012, which is like, so this is the 4011. See, it's like so tiny. And this is the 4012, and it is like gigantically big. It is a huge monster and a beast, but it does have lots and lots and lots of good information. All right. There will be a quiz before we're done that says treasure hunt through 4012 to find blah, 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 whatever it's going to be. I haven't made it up yet, but it will be fun. That will be, yes, next week. All right. So use the reference tables, use the publications. They are going to be your very good friends as you do this. We're going to hide. We're going to keep on going. All right. So the plan was to cover a large amount of material tonight. We're going to probably not get through as much as I wanted, but that's okay. But I want to talk about it in general terms, right? Because there is, right, this is a huge book, right? This is a lot of information. And we're not going to cover everything like to the nth degree of detail, right? Because if we think back, right, when I first said the differences between resident and non-resident, right? The VITA program is designed to support residents. The tax software is designed to support residents. So there are lots of tools and aids to help you with that. The 4012 is one of them. The software is another one. So there's a lot of help for you out there in that. So we don't have to go into quite as much detail because these other supports will help you through the process. All right. And when we think about income, you know, generally when somebody has income, you know, most people do not have $5,000 of cash income like Joe saw with Edna in that example. Most people are going to have some sort of an income document, right? Like a W-2 or a 1042-S if you're a non-resident, or a 1099. And it'll tell them, what is your total income? What is the amount of tax that was taken out? So that right there makes your life a lot easier because you already know those amounts. And you just have to find where to enter that into the software. For the adjustments and deductions and credits when we get to them, the same thing, right? In a lot of situations, there's going to be a form that tells you, oh, hey, here's how much student loan interest that was paid. Oh, hey, here's how much tuition that you paid at a school. Here's how much mortgage interest you paid. All of those things, there's documentation that's provided to make your life easier. generally, this means that, so when we do it, right, FSA software, the taxpayers are doing it, so they're entering all of their documents, and then the software will put it in the right spot. They will do the right calculations, put it in the right forms. So we need to be good at helping them enter their documents and their information. And we also need to be good at looking at those documents and looking at that finished return to say, is everything correct? I have a W-2. Do the numbers match? What's on the tax return is what's on the W-2. Sometimes there is not documentation, right? So a charitable contribution, if you give money to a charity, if it's under a certain amount, the IRS does not require that charity to provide documentation. However, the IRS says, well, that taxpayer still does need to have documentation of some sort, right? Maybe we don't have to see it, but the taxpayer still needs to have it in case the IRS asks. We can take their word for it, right? If it's reasonable, if we believe the taxpayer, we don't need to go through all of their receipts with them. But generally there is going to be documentation somewhere for any numbers that we put into a tax return. All right, income. This huge list is all of the types of income stuff. So we're going to go through it relatively quickly. Again, because we've already talked about some of these things, but there's some new stuff that residents get that non-residents don't really see. And a lot of stuff here that's kind of out of scope. So we're gonna like jump over that really quickly. All right, I got rid of those things. All right, this is the part of the 1040 of where all of that income stuff shows. It's on the front page, income line 1, going on down through line number 8. What is income? This is the way I described it here. So it's basically all income is received in the form of money, goods, properties, or services that is not otherwise exempted by tax. So from a resident perspective, right, they don't care where in the world or out in outer space you are. If you are getting money, right, the Uncle Sam wants their share of it. It comes from sale of your house. It comes from sale of goods. It comes from, your labor. It comes from things that you receive, right? If you theoretically, right, you say, oh, hey, I'm really good at website design and you're really good at plumbing. Can you come fix my sink and I'll update your website? That's theoretically, now you just exchanged goods and services. So that's income. Income that is taxable has to be reported on a taxpayer's return. Income that is not taxable may still have to be shown. You just have to say it's not taxable, that it's exempt from tax. Earned income is income where you have to work, right? You have to do something to get that income. So wages or having a business. Unearned income means, right, if you sleep in, if you don't show up, you still get paid. So that's things like dividends, interest, rental income, like that. All right, and unless there is an exception in the tax law, all income is taxable. This is the huge list in the IRS table in here that talks about all of these types of things are income, right? It's a very big list. Don't worry about a huge list. A lot of this stuff is not necessarily going to be in scope. Even when it is in scope, right, they're going to generally have some sort of document talking about what is that income. Wages, salaries, and tips. We already saw W-2, right? So that's what this looks like here. Wages, tips, and other compensation is box number 1. If they had Social Security tips, that would be down in here if they had other tips, but otherwise, box number 1 is what you put in. So you're going to use their report. Dang it, I thought I got rid of those things. Okay, you're going to use their forms to enter the information. All right, that's basically what it is. All right, if they have tip income, there is an additional form if it's not reported. So if they work as a waiter or waitress and they get cash tips, it's not reported on their W-2, there is a separate spot. Still needs to be reported. Remember, don't be Joe. And there's a special form for that. If we find anybody that has that situation, that's what we would talk them through. All right. Other line item ones, if they work as a household income, such as doing babysitting or housekeeping, they may not get a W-2. They would still have to report it. Tip income, Medicare waiver, Medicaid waivers, pardon me, taxable dependent care benefits. If their employer gives them any of those, that'll be on a W-2. They can enter that. All right. Other line item ones, that can be adoption benefits, wages from a Form 8919, if they didn't take out Social Security and Medicare taxes, retirement income that was improperly deferred, or non-combat tax pay or non-taxable combat pay. Again, not common things that we would generally see. There would be more information in our 4012 about how to handle those, as well as on the IRS publications. All right, when you get interest from a bank, unlike non-resident aliens, right? They don't have to pay any interest or tax on interest. Residents do. Comes on a 1099 INT. It looks like that. Can also come on a brokerage statement, where it'll look like this. This one is a consolidated one, so it's got a dividends. It's obviously old. They still look about the same. It's got a dividends section and it's got an interest section. Look at the box numbers there. Those match the box numbers when you're entering the data in the tax return, in this tax layer. All right. All right. So examples of interest include things like checkings and savings, CDs, savings certificates, government bonds. If the taxable interest is over $1,500, there is a Schedule B that gets added to the taxpayer's return. It doesn't mean anything. It's just that's where they report it separately. If a taxpayer gets less than $10 of interest from their bank, they may not get a 1099 INT form, but they still have to report the interest, right? All right. Some types of interest are tax exempt. This is usually interest from like government entities that are not the federal government. So like states or counties or cities. So like Minnesota bonds would potentially be exempt from federal taxes. All right. Tax exempt income is reported on one of the separate lines right by the taxable interest. Again, if they have this, it should come on a 1099 INT. It should show tax exempt interest, right? Line box number 8, tax exempt interest right there. Makes it easy. Dividends are the same, right? They come on a 1099 div form, whether it's this version right here or that kind of consolidated version. Again, it's going to talk about total dividends. Basically, this is when the company pays you money out of their earnings and profits. If you own the stock long enough, you get what's called qualified dividends that gets taxed at a lower rate. The tax layer software knows all of that information. The brokerage knows that. They're going to report ordinary dividends and qualified dividends, right? So you don't necessarily have to know those different amounts. The form is going to have that information on there for you. Same thing for capital gains distributions. If you own like a mutual fund, sometimes they do a capital gains distribution. That's reported on a 1099 div. It'll be in box 2A. Enter that information. It will do it for you, and then it'll do all of the tax calculations for you. All right. So you can see that I'm going to be kind of on a repeat, right? This is the type of income. This is your form. Enter it into tax layer. It'll take care of it. This is your income. This is your form. Enter it into tax layer. Capital gains, right? You sell stocks, you sell a house, you sell things like that. Reported on the 1099. Sorry, let's do pensions. IRAs, pensions. It's not something we commonly see at international student tax clinics, but it's theoretically possible that we would. Actually, that is not true. We do occasionally see them. We'll talk about it more then. But if you retire, if you start getting money out of an IRA or a 401k, you get a 1099-R. It talks about what is your gross distribution, what is your taxable amount, was any tax withheld, it talks about why the money came out, what kind of account it was. All right. Generally, often the taxable amount will be determined for you, so you don't have to figure that part of it out. If you don't have any information about that, we would come see one of the site coordinators. We can talk about it. There is additional information in here and in some of the IRS publications about how do you determine what the taxable amount of it is. All right, this is the box 7 is the distribution code that talks about why that money came out. Is it like a regular distribution? There are some exceptions for when you can take things out and not have to pay a penalty. And so if an exception applies, that distribution code would include that information there. Social Security benefits, again, not common at our international student tax clinics, but this is what that form looks like. Box number 5 is the big one that's got the net benefits. And that's generally what you have to enter there. All right. If you have any other information, such as in box 6, you would need to make sure you enter that. Here, kind of one of the things that we talked about, right, is a portion of the benefits is taxable if the total income plus 1/2 of the benefits is more than a certain base amount, which is at $35,200. If you are married filing joint, the amounts vary based on your filing status. So if you go into the filing status pages in the books in the 4012, it has the table about what are the various amounts and when you have to include that for filing a tax return. All right, again, calculation is complex. Tax software does it for us. Hooray for tax software. Okay. Lump sum payment. So generally when you get paid a retirement amount, you get paid like every month, but there can be certain circumstances where you get a bunch of money all at once. There are a couple of ways to figure out how much of that is going to be taxable. Basically, you can do it so you report everything as taxable in the year that it's received. You can also do it so you treat it as being paid in the earlier years based on whether any part of those benefits was taxable based on the earlier year stuff. That would be a bit of a mess, but that is definitely possible to do. So remember, we're still providing, I hate this thing is, there's a timing on it. I didn't mess that up. Okay. We're helping people prepare their tax returns, right? So if somebody does this and they say, oh, I have a lump sum payment of my Social Security, I need help with figuring that out. First thing that we're going to do is we're going to find our big book right here, and we're going to turn to the page that talks about lump sum payments of Social Security and walk through that there, okay? All right. Capital gains, right? So this is a capital asset is a thing, right? It could be a home, it could be a stock, mutual fund, bond, could be cryptocurrency, but that's out of scope for us. When you buy it, then you later sell it. The price difference determines whether you made money on it, that you have a gain, or if you lost money on it, you have a loss. So if you sell a capital asset, until you sell, nothing counts, right? You don't actually have any kind of a gain or a loss. It's only when you actually make that sale transaction that your loss or your gain is fixed, and then you have to report it. And it gets reported on Form 8949 and Schedule D. These subtotals from 8949 are carried over, which gets carried over all the way back to the 1040. And again, transactions involving digital assets, virtual currency, cryptocurrency are out of scope for us. So we do not have to worry about this. All right. There is a thing called a holding period, so which that gentleman back there was talking about. So the idea is if you sell your asset within 1 year of when you bought it, so in less than a year, it is considered a short-term capital gain. If it's been more than a year, it is a long-term capital gain, and they are taxed differently. So long-term capital gains get taxed at a lower rate. Short-term capital gains get taxed basically at your income rate. When you determine those gains, you need to look at what you originally paid for it and then what your sales price was. So your cost basis, what it actually cost you to buy it, and then what your sales price was. If you are not good at picking and choosing stocks and you lose money at it, you can take $3,000 of losses from stock sales and use that to subtract against your other income. So let's say you earn lots of money in wages, you're a computer science guy that works for Google, but you invested in Google stock and you lost a bunch of money. You can use $3,000 of your losses to offset your incredibly high wages for working at Google. All right, if you lose more than that, you can carry it forward to other years, but if it's only $3,000 that you can take in any one particular year. All right. So that's the basics of the income that gets reported on the 1040, right? So generally you could look down the form itself to see, okay, wages, interest, dividends, retirement, Social Security benefits, capital gains. All right. There are additional kinds of income, right? Because the IRS says it doesn't matter what kind of income it is, we want our piece of it. So there are additional types of income that get reported on Schedule 1. Again, generally, there's going to be an income document. You put the income document in, it will show up in the proper place, Schedule 1 or 1040. The two big ones that we're going to see a lot, taxable refunds and scholarships, right? We're not going to talk about scholarships today, but we're going to talk about them later. But there are a bunch of other ones that can happen. Those all get summarized onto line number 8, which is that other income. And this is what that Schedule 1 looks like. And it's just a big laundry list of all different kinds of income. All right, so we're going to talk about that. So I already talked about taxable refunds. So the same idea applies for residents and non-residents. The biggest difference here, right, is that most non-residents are required to itemize. So for them, that state tax that they paid is a deduction and reduces their income. Many residents take the standard deduction. So whatever state tax they paid, it doesn't make any difference on their tax return. And so if they took the standard deduction the prior year, then their state tax refund is not going to be taxable because it didn't have any effect on their tax return the prior year. Theoretically, a lot of people receive a 1099-G that reports their state or local tax refund. Minnesota does not send those out, so we will take their word that many other places do because we don't see those. All right. All right. Alimony. Again, not very common, but if somebody was receiving alimony, so the two spouses got divorced, one was ordered by the court to provide support for the other spouse. As long as that divorce decree was executed before December 31st, 2018, then that is income that would need to be included. And it's an adjustment for the spouse that's providing it. If it is after that time, then it does not matter. It's not going to be included on here. Business income does get very complicated. We'll talk a little bit more about business income later, but the idea is that the business would be reported on a Schedule C. So you would have a Schedule C form that says, this is my business. I am Maria. I have bees and I sell honey. So that's my business. And so I could deduct all of my expenses for that, such as like buying bees and buying bottles and having really pretty labels. And when I sell honey to people, then I have to include that as my income. All right, business income can also come on other forms such as 1099 NEC, 1099K, which is a credit card form, or potentially a W-2 if they're a statutory employee, which is basically like a pastor or somebody working for a church. The taxpayer would also have records, right? If it's not coming from somewhere else, they would have Venmo transactions, they would have PayPal transactions, they would have something that talked about where does this income come from. It could also include cash, right? So don't be Joe. If you get cash income, you still have to report it on your tax return. All right. We're going to skip. This is out of scope. All right. I don't really want to talk about these because they're out of scope. All right. So real estate rental. So if you own a property and you rent it out like on Airbnb, you get money for it. That is a business and you would have to pay taxes on it. Likewise, if you are a partner or own shares in a corporation or trust, the income that you receive, you would also owe taxes on those. Generally, those are all going to be out of scope for us. The one exception, well, it's going to still be out of scope for us, but if you have rental property and you're in the military and you're renting out your house because you were deployed, that is in scope if you have military certification, but we're not going to do that. So that is not going to be a problem for us. Farm income is also out of scope, just in case anybody has a farm. We're not going to talk about that. Unemployment compensation would be in scope, right? Non-resident aliens don't get unemployment, but residents sure do if they were employed, so they would get that. Comes on a 1099-G, relatively straightforward to enter there. All right. There were some special rules for 2021 and 2022 about repayment and unemployment compensation. Those should all be resolved as far as I know for 2023. If it's any different, I will update everybody when all of this stuff finally comes out here. All right, and then other income, again, huge laundry list of things like If you live in Alaska, they pay you to live there. So you get Alaska Permanent Fund dividends, things like that. But our big one here is line R, scholarship and fellowship grants not reported on a W-2. So when we have somebody with a taxable scholarship, that's where it shows up. Gambling winnings would show up here as well. Cancellation of debt would show up. Jury duty pay, if somebody got to go to jury duty, that would show up here also. There's a big long list of other types of income. I'm not going to worry about all of those things here. So basically, once again, lots and lots and lots of potential types of income. Most of them are going to be incredibly rare for us, right? We're going to see generally students, teachers, researchers. They're going to have wage income. They might have a scholarship income. That's going to primarily be what we see. But we talked through all of these things because it's theoretically possible we could have somebody. Some of our other partners would probably definitely have some people with all these other types of income. And there may be questions about it in the text. All right. One last thing, other income. So that can be things like cash earned from side jobs, prizes and awards, hobby income, rental income, all that kind of stuff. Again, that would get reported on this form here. Still needs to be reported. Still needs to have taxes paid on it. That's like the basic thing. Generally, the 1099 forms are not required to be provided if the amount is less than $600. But again, even if it's less than $600, they still need to report that income. Right. Thinking about that form. All right. I'm going to skip that. So basically the idea, generally other income is reported on a 1099 miscellaneous. Talk about scholarship income later. Okay. Any questions about that? I know that that was like a really quick run through a lot of types of income, right? But the kind of summary high level, right? Generally, the income is going to be reported on a form of some sort. We're going to enter all of the forms. We're going to, we would ask questions if we're doing a review. Okay, this is your income form. Did you have any other income of this type? Did you get it all entered correctly? All right, we're good. Off we go. All right, let's talk about adjustments. So income, money is all coming in, right? Adjustments, we said that subtracts from income based on certain things that you paid for, right? Certain expenses that you have. And there is a list, of course, there's a list of all of these different things. And so we're gonna walk through some of the very common ones and some of the not very common. All right. So again, so the idea, right, is that your total income minus the adjustment. So there is a word for that. They call it adjusted gross income, AGI. That gets used in a lot of places. Most particularly when you e-file, they'll say, what was your AGI from last year? So you have to go to your tax return and look at that. That matches up that number to make sure that you are who you say you are. So adjustments reduce the amount of taxable income that you have, which will ultimately reduce the amount of tax that you owe. But they do not necessarily change other types of taxes like self-employment tax. And they're reported on Schedule 1, which comes over here. Skip that. All right, so educator expense adjustment. So if you work as an eligible educator, you can deduct up to $300 if you're single or $600 if you're married, if both spouses are eligible, as adjustments to income. So imagine you're an kindergarten teacher, you buy supplies for your classroom, up to $300 of those can be deducted. One of the requirements is only K through 12 education, so no college education, and you have to also work for at least 900 hours in the year on that. And they must be qualified expenses, which means they must be ordinary and necessary, such as like books, equipment, and supplies. Homeschooling expenses would not qualify for this as well. All right. If you have any qualified expenses, they must be reduced by interest on U.S. government bonds, savings bonds, any distributions from a qualified state tuition program, or any tax-free withdrawals from an education account, or any reimbursements that you receive that aren't reported on your W-2. Next one is penalty. So if you get a CD, right, a certificate of deposit, they generally say, okay, you give me the money for a year, we'll give you all of this interest back. If you take your money out before that deadline, they will charge you a penalty, usually like a couple of months of interest. And so if you do have that happen to you, they will report it to you on the 1099 INT. It'll be in box number 2, early withdrawal penalty. That is an adjustment. So that will reduce your income by that penalty amount that you had to pay. All right. So if it's there, it will be reported on that 1099 INT. It's got to be. It doesn't count if it's not reported on that. All right. If the documentation from the taxpayer doesn't agree, we need to use what the form says. That form is reported to the IRS, so that's what's needed to be used. They don't agree with that, they need to talk to their bank about it, right? Because their bank is the one that gave them that form. They don't think it's right, that's where they need to go. All right, so we said if you received alimony, you had to report it as other income. If you pay alimony and you meet the criteria, you can deduct that or use that as an adjustment to your income. Again, it's only for divorces that were after 1985 and before the end of 2018. There's a whole list of requirements to be considered to be eligible for it. I'm not going to go through those right now. If you have somebody that's in that situation, which is not common for our clients, but if you did, that would be a list. Send them, go to the 4012 and work with them through that if they ask that question. All right, alimony paid is reported on the Schedule 119. If you pay alimony, they need to have the Social Security number or ITIN number of the person that they're making the payments to as a requirement. So, and money for child support is not count as an adjustment. It's only money that's alimony for the spouse. If you save for individual retirements, like in an IRA account, then you can have a deduction. You can deduct up to $6,000 or $7,000 if you're over age 50, but not more than your yearly income compensation. And that is a deduction, or it's an adjustment. So it reduces your income by that amount. So instead of saving $6,000, it's like you're only having to pay, $5,000 to save $6,000 because you don't have to pay tax on it. Student loan interest deduction. So this is one that we do see every year. We probably see 5 people with it or something like that. So it's not common, but we do definitely see it, right? So for this one, the interest on a qualified student loan can be deducted for up to $2,500 for the year in which the taxpayer paid the interest. They have to be legally liable for their loan. They can't be married filing separate, which kicks out a lot of our non-resident aliens. They cannot be claimed as dependents on somebody else's return. They must have the form or be able to look up the amount of how much interest they've paid. And the deduction is reported on Schedule 1. So it's pretty straightforward. There are additional adjustments that are people are eligible to do. Health savings account deduction, moving expenses, self-employment tax, self-employment savings, retirement savings account, or self-employment health insurance account. Not very common items, but they theoretically could show up, I guess. A health savings account, right? This is where you save money for medical expenses. You have they call it a high deductible plan. You have to pay $3,000, $3,500 before insurance kicks in. So you can save money tax-free to cover those expenses. These are the criteria here. Basically, if you make a contribution to one of those and it is an adjustment, if you do it through your employer, it's going to be reported on your W-2. It's code W in box 12 on your W-2. So if it's already reported on your W-2, you don't have to report it anywhere else. It's only if they make an additional contribution to their HSA outside of whatever the employer did. And they can make a contribution up until the filing deadline for the prior year. All right. That's basically what I already said. All right, self-employment tax. So the idea, right, is that if you work, you have to pay Social Security and Medicare taxes. As an employee, you pay half and your employer pays half. If you own your own business, you get to pay both halves, you lucky person you. So, but you can deduct half of that tax. So like the employer portion of it, it's deducted from your income. It's done on Schedule C and Schedule SE. The software will do it for you as long as you enter all of your business income properly. Same thing for health insurance. There's a deduction for that. If you, as in your business, you have health insurance. All right, I'm gonna jump on that. Not gonna do that. All right. This is another set of references. So I'm gonna put this in all of the sections here as well. So it'll be in the presentation and it'll be out on the Moodle as well. So if you do have a question about it, generally the IRS will have a topic or a publication that goes through in more detail, like exactly what needs to be done, who qualifies, how it all works. Here is our big tax equation again, right? So we did income, we've done adjustments. The next is deductions and exemption to get taxable income, tax rates. So as a reminder, right, tax filers are not taxed on all of their income, right? They only have to pay tax on their taxable income. So total income minus adjustments equals adjusted gross income. Adjusted gross income minus deductions equals taxable income. If there were exemptions, it would be adjustable gross income minus exemptions minus deductions would equal taxable income. And just because it's taxable income doesn't mean that it will be taxed, just means that the income is reported on the 1040. So we add up all of our total income, all of those different types of income. We subtract all of our adjustments. We subtract our deductions to find out what our taxable income is going to be. All right. So let's talk a little bit more about deductions. All right. So there again, right, I talked about this before, right? There are two types of deductions: standard, which is a set amount, and then itemized, which says based on how much you spend on certain things, you can subtract that from your adjustable gross income, your adjusted gross income. Have to pay taxes. You can only use one of those two options. Now, for non-resident aliens, it's very simple. Students from India can take the standard deduction. Everybody else is forced to itemize. For residents, it's a little bit more complicated. Almost always, you can choose whichever one is best for you. However, there are a few times when you are required to itemize. Generally, if you are using the married filing separate status and one spouse itemizes, then the other spouse is required to itemize as well, right? Which can happen if we have somebody that's a resident married to a non-resident alien, right? That non-resident alien is forced to itemize. If they file separately, that means that that resident spouse is now forced to itemize as well. All right, right? Choose whatever is best unless you're forced to itemize, which is not very common, but it can occasionally happen. All right, so the standard deduction varies based on your filing status, right? So this is where we talk about why the filing status is so important. It's because that determines your standard deduction. So that determines like that first big chunk of money that you don't have to pay any taxes on. It also depends on your age, if you're over 65 or not. It also depends on if you are legally blind or not. If you're legally blind, you get a larger standard deduction as well. All right. And generally, if you qualify as somebody's dependent, you do not get to take the full standard deduction. You get a smaller one. All right. These are the 2023 values. So single and married filing separately is 13,850. Married filing joint and qualifying surviving spouse, not widower, I need to fix that, 27,700. And then head of household, 2,800. All right. And then if you are above, either above 65 or blind, and you use married filing joint or qualifying survivor spouse, you get an extra 1,500. Single or head of household, you get an extra 1,850. All right. For itemized deductions. So again, right, this is that list of things where if you spend money on them, you can reduce your taxes. So the law changed back in 2017 pretty significantly. One of the things that it did was it changed what types of itemized deductions can be claimed and the amounts that can be claimed. All right. Generally, itemized deductions are going to apply to somebody who has higher income, who has a mortgage, who pays a lot of property taxes, as well as state and local income taxes. Not always, but that's kind of a general rule. Individual other expenses can also include things like medical and dental expenses, gifts to charities, and some miscellaneous deductions. So you're just going to compare what's the biggest number and look at it all. Remember, it's got to be over that like $13,850 if they're single. All right, medical expenses would count if the amount is over 7.5% of your adjusted gross income. So that says, let's say you earned $100,000, just to make up some round numbers. So if your medical expenses, so any medical expenses over 7,500 would count towards itemized deductions for medical and dental expenses. State and local taxes, that would be property taxes, sales tax or income tax. Those count, except now there's a limit on $10,000. So if you pay more than that for all of those taxes, which is pretty common, especially in a higher tax state like Minnesota or California or New York, it's cut off at $10,000. That's the main reason why a lot of people take the standard deduction now, is because those amounts that they pay, they don't qualify for the itemized deductions anymore. If you own a home and you pay a mortgage, you'll get a 1098 that shows your mortgage interest payments, and you can deduct that for the first and second home only. Cash or non-cash deductions to a qualified charitable organization count. There are some limitations about that based on the VITA scope. Miscellaneous deductions also could potentially apply, but again, not common for us to see. All right. Other resources. There is a very happy little couple of like work little question and answer things on the IRS website of like, what is my filing status? Should I itemize or should I take the standard deduction? So there are lots of other resources out there to help you or to help other people determine like what is the way they should go about this. Okay. So having said all of that, if you guys are all still alive and have made it through this much taxes, we're going to actually try to do some tax stuff here. We're going to do another little bit of form. So we are going to go into TaxSlayer. We're going to go into the practice lab, actually. This is the account here. I'm going to click on it. I'm going to escape and click out on it. All right, so when you come here, you'll see in the presentation, so there's basically 2 sign-ins to get into TaxSlayer Practice Lab. I don't know why, but that's what it is. So the first one is like the generic website password. It's Train Pro Web, all capital letters. Train Pro Web. And then once you get into that, you would create your own account. I've already got mine created, so I don't need to do that. I have the information here about creating an account, what you should put in there. And when you're in, you go to the practice area. And ta-da, here you go. You can start a new return. All right. And if you do that, it'll start off with just like enter your social security number. You can enter whatever number you want. So this is a sandbox. This is not real software. Well, right now it's definitely not real software because they're in the process of updating it. So the software is not perfect, right? There are, if you want to, you can sign up for their little alerts that come out every few days that say, hey, here's this problem we found. Hey, here's this problem we found. Hey, we fixed this problem. So they are in the process of implementing the 2023 software, but it is not perfect yet. But even when it is, even when they finish updating it, right? This is not real software. You can't create a real return. You cannot e-file a real return. All right, it's not going to let you do that. So you can use whatever social security number you want. 1111. Just remember what you did, otherwise, because they still have to match. And it will let you start a return. And if you know what your filing status is, you can click on that. If you're not really sure what your filing status should be, it has a nice little wizard that helps walk you through. Well, what should I put? Were you married on December 31st? No. Were you a citizen or resident? Ooh, they've added that in there. That is super nice. Yes, I'm a citizen. Have you ever been married? No. Did you pay more than half of the cost of keeping up a home where you lived? Yes. Did anyone live with you for more than 6 months during the year? Including select yes if you had a child born during the year or a child who died in the year. We're going to say no. All right. I do not have a qualifying person. Do I pay more than half of the cost for keeping at my parents' house? No. I am single. So it basically will walk you through figuring out your filing stats. All right. All right. So what we're going to do, I'm going to show you preparing a return for a simple situation, right? This is going to be relatively common situation that we would see in one of our tax clinics. I'm going to go through it relatively quickly here, and then we're going to wrap things up. And there will be an assignment, another quiz on income and adjustments and deductions. But then there'll also be a, hey, go do a simple return. All right, so if we go back, go on to here. So our example here is going to be Jacob. So Jacob is a sophomore at App State. He's studying history. He was born January 1st, 2002. He is a US citizen. His parents live in Charlotte, North Carolina. His parents are paying for his tuition, room and board, and they're going to claim Jacob as a dependent, all right? But he did some work on campus for some spending money. All right. And he earned $5,200. All right, is what he earned. So because of his income, right, he is a dependent. He does not necessarily have to file a return, but because he has tax withheld, he can file a return and get his money back. So that's why he's going to do that. So let's do Jacob's return. I'm going to make that small. All right, so Jacob is single. All right. Jacob Miller, January 1st, 2002. He is a student. All right. Taxpayer can be claimed as a dependent on someone else's return. We click yes for that. So he can be claimed. And the next question, if he can be claimed, is he actually going to be claimed? And the answer is yes. His parents are going to claim him. He was over 18 and a full-time student. Yes, that is true. He is not blind. He is not deceased. He does not want to give any money to the presidential election fund. There was no combat or natural disaster. No digital assets. Good job, Jacob. He doesn't want to get information in a different language or anything like that. All right. His address, 432 Elkstone Hall, Locust Street. Here we go. 28608. It's fabulous. It looks up your address. Picking up a phone number for him. Off we go. Continue. All right. It says, hey, are you sure you said that you were being claimed as another person? To be eligible to claim dependents, you can't. So it's just basically a warning saying this is fine. All right. And now it takes us into the income section. Look at that. The first thing that's here is his W-2, right? So we would enter his W-2. It has all of his information. 56, 117, 60, 30. It's even in there as App State. Probably from when I've done all kinds of good stuff here. That's fabulous. All right, now we just enter his boxes. 5,200. 180. It's an automatic calculation for what it thinks the Social Security and Medicare tax should be. So you can just double check, make sure those are right, or change them if they're different. Those things are all blank. Those are all blank. 14 is blank. All right, 15. North Carolina. State wages, it copies it down, but you can change it if you need to. Tax paid. Continue. There we go. All right. And if we look at this, right? So here are all of those different types of income that he could have gotten, right? Unemployment, miscellaneous, non-employee, business, Schedule E, Schedule F for farming, all that kind of stuff, right? None of that stuff applies to Jacob, right? Jacob lives a simple life in Carolina. All right. Adjustments, right? He doesn't have any of these things, but if he did, right? Educator expenses, health savings accounts, contribution to savings accounts or retirement accounts, penalty on early withdrawals of savings, student loan interest, all of that stuff could go there if he had it, but it doesn't. Standard deduction, right? It's automatically calculating for a Jacob based on what we've entered, that's the best option. We don't need to do anything there. If he had any credits, we would go in here, we could enter them, but none of these things apply, right? He doesn't have child and dependent care credits. He doesn't get any education credits because he's being claimed as a dependent. We'll talk about that later, but for him, for now, that's all blank. None of this stuff applies, right? Jacob's life is simple. We all wish that it could be that simple. He doesn't have any other taxes, anything like that. He didn't send any extra money in to the government, nothing like that. No miscellaneous forms, no miscellaneous forms. Health insurance, he did not get a 1095A. That's all it asks there. Can't do a state return. And we're done. That's all we needed to do for Jacob, right? He's a pretty straightforward guy. Jacob Miller, there's his age. He's 21. That's where he lives, right? His wages all are showing up right here. Line 1A, 5,200. That's all he's got. 5,200 in wages. His deduction, his standard deduction is his earned income plus $400 up to, I forget the number off the top of my head. So he doesn't owe any tax at all. We go to page 2. We'll see taxes all zero, but he'd already paid 180 bucks, so he gets all of that money back. So Jacob is happy to see us. He will come back next year, and he keeps on working. All right. And that is basically, that's a very, very, very simple, but also very representative return for a student at a tax clinic, right? All right, I'm going to save and exit. And the reason why is that now Jacob is in here in my history, right? So when state taxes come live, I can go back in here, I can edit him, and I can do his North Carolina return. When we want to throw in some exciting stuff that Jacob did, like he didn't tell anybody, but he went down to the local riverboat casino and won $1,000 gambling. We can figure out how to go back in and edit his return here. And that way it's all saved in there for him. Okay. All right. Yep, wrong place, wrong place. There we go. There we go. Okay. Does anybody have any questions on that? All right. I know this is like information overload day. I apologize. It is long. It will get better. Yes. So work study should be on a W-2 form because you are working, right? If you don't show up, will they still pay you? Yes, so that is definitely wages, right? A scholarship is, hey, you're awesome. Here's some money. Go get an A. but they still give you the money. All right. All right. Okay, so that is the end of our resident training for today. All right, so again, same thing on Link and Learn, right? Once it's live, standards of conduct, intake interview, we've done the training, you've done the quizzes, you should be in good shape. Make sure you've got your reference materials available. For the Moodle class for the resident, right? So I know that we were late on getting it out. I was late, I apologize. So get through modules 1 to 3 if you haven't already done so. We're going to put some additional info and quizzes out for these income adjustments and deductions, and 2 like really simple practice returns. All right. So that sounds like a lot, but we've got 2 weeks because it's going to be Thanksgiving. We're not meeting next week. So you've got lots of time to catch up on that. And I will probably get these out on Thursday. Tomorrow is going to be finishing off the non-resident stuff and getting that all published for everybody. Okay. Anything else before we call it a night? 5 minutes to spare. Okay. All right.
Have a nice Thanksgiving.
Yes, you as well. And I'm going to stop sharing. I'm going to stop recording. There we go.